Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings and find the hidden stories. Today, we're diving into GraniteShares Gold Trust's latest 10Q report. And let me tell you, it is all about gold, but with some interesting financial twists and turns. Before we jump in, if you dig getting these financial deep dives, make sure you are subscribed. And hey, we've got a thriving community over on Discord, link in the description, so come hang out. Alright, this is a 10Q filing, which means it is an update on how a company is doing quarterly. For GraniteShares Gold Trust, this report covers the period ending the 31st of December 2025. Now, what is this trust? It is basically a way for investors to bet on the price of gold without actually holding physical gold themselves. Think of it like an ETF, but specifically for gold bullion. The company's goal is pretty simple: make the value of their shares track the price of gold, minus some costs. Let's get straight to the numbers because that is where the real story is. We're looking at the statements of assets and liabilities. On the 31st of December 2025, the trust had investments in gold bullion valued at a whopping $1.49 billion. That is a massive amount of gold being held. Total assets are also just over $1.49 billion. Now, for liabilities, they are quite small. Fees payable to the sponsor, which is a sort of management company, were only $222,000. This tiny liability means almost all of the trust's value comes from the gold it holds. And that leads us to the net asset value per share at the end of December 2025. Each share was worth $42.45. Compare this to the 30th of June 2025, when a share was worth $32.42. That is a significant jump, over 30% increase in just 6 months. This jump directly reflects the rising price of gold, making investors who held these shares quite happy. Let's look at the schedule of investments. This table tells us exactly how much gold they have. As of the 31st of December 2025, they held about 346,416 ounces of gold. This gold had a cost value of $640 million, but was worth nearly $1.5 billion. Again, a huge difference between what they paid for it and what it is worth now. This massive increase in value is why the net assets are so high. Now, let's move to the statements of operations. This is where we see how the trust made or lost money for the 3 months ending the 31st of December 2025. They had a net increase in net assets of nearly $163 million. The main driver here was a gain of over $163 million from the unrealized appreciation of gold bullion. Basically, the price of gold went up, and that made their gold holdings worth a lot more. They also had some smaller gains from selling gold to pay expenses. Looking at the 6-month period ending the 31st of December 2025, the net increase in net assets was an even more impressive $342 million. Similar to the 3-month period, the vast majority of this gain came from the unrealized appreciation in the value of their gold holdings, which was over $334 million. The overall growth in the trust value is clearly tied to the performance of gold itself. The financial highlights section gives us some more per S-hair data. For the 3 months ending the 31st of December 2025, the net asset value per S-hair started at $37.71 and ended at $42.45. This growth is mainly due to that unrealized gain of about $4.76 per S-hair on their gold investment. Their total return ratio at net asset value for that 3-month period was a solid 12.57%. For the 6-month period, the total return was an even more eye-popping 30.94%. This shows just how well the trust performed when gold prices were on the rise. Let's dive into the notes to the financial statements. This is where they explain the details. Under investment in gold, we see a clear breakdown of how the gold ounces changed. From the 30th of June 2025 to the 31st of December 2025, they added about 15,000 ounces of gold through contributions and distributed about 5,000 ounces for redemptions. The rest of the increase in value, over $334 million, is all due to the rising gold price. This next part is important for understanding how they value their gold. They use the fair value hierarchy, and for their gold investments, it is all level 1. This means the value is based on unadjusted quoted prices in active markets for identical gold. In simpler terms, they're using the going market rate for gold, which is determined by the London Bullion Market Association, or LBMA. This is as straightforward as it gets when valuing an asset like gold. They also talk about related parties, specifically the sponsor and trustee. The sponsor, GraniteShares LLC, gets compensated for their work. They receive a fee equal to about 0.1749% of the trust's net asset value. This fee is paid monthly, even though the sponsor handles a lot of the administrative and marketing expenses. This fee is still a cost to the trust. For the period ending the 31st of December 2025, These fees payable to the sponsor were $222,334, a relatively small amount compared to the overall value of the gold. Moving on to management's discussion and analysis. This is where the company explains their results in plain English. They reiterate that the trust is designed to track gold prices. They mention that the net asset value increased significantly due to a jump in gold prices and an increase in shares outstanding. They also explain that the net asset value per S-hair increased slightly less than the price of gold because of the sponsor's fees. For the quarter, these fees were $626,724. They go into detail about the quarter. The net asset value went up by about 16%, mainly driven by a 12.6% rise in gold prices. They also saw an increase in the number of shares outstanding, which means more money flowed into the trust. For the 6 months, the increase in net asset value was a massive 34.96%. This was fueled by a 31.0% increase in gold prices. Again, they point out that the per S-hair increase was slightly less than the gold price increase due to those sponsor fees, which amounted to over $1.1 million for the period. Now, looking at the controls and procedures section, this basically confirms that the company has systems in place to make sure their financial reporting is accurate and timely. They state that their disclosure controls and procedures were effective. This is important for investor confidence, ensuring that what is reported is reliable. We should always check the risk factors, and here, the company directs us back to their prospectus for a full rundown. They emphasize that the trust's sole business is investing in gold bullion. This means the price of gold is the biggest factor affecting their performance. They list several things that can impact gold prices, like global supply and demand, inflation expectations, currency exchange rates, and even global economic events. It's a clear reminder that investing in gold, and therefore in this trust, comes with its own set of risks. Finally, the exhibit section lists all the supporting documents attached to this report. This includes certifications from their top executives, ensuring the accuracy of the financial statements. There are also various XBRL documents, which are basically standardized formats for electronic financial reporting, making it easier for computers to read and process this information. So, what is the story here? GraniteShares Gold Trust is a pure play on gold. Its performance is almost entirely tied to the price of gold. When gold goes up, this trust value skyrockets, and when gold goes down, it suffers. The numbers for the period ending the 31st of December 2025 show a very strong performance. Driven by a significant increase in gold prices, the trust effectively captured that upside with its net asset value per S-hair seeing a substantial increase. The costs, like the sponsor fees, are minimal compared to the gains from gold appreciation, which is a good sign for investors in this trust. However, the main risk is the volatility of gold itself. Global events, economic uncertainty, or even shifts in central bank policies can cause gold prices to fluctuate wildly. While the trust performed exceptionally well in this reporting period due to rising gold prices, investors need to be aware that this trend could reverse. The trust's strategy is simple and transparent, but its success is dependent on a single commodity. In conclusion, GraniteShares Gold Trust is a straightforward way to invest in gold. The recent period shows impressive gains thanks to a bull market for gold. The main strength is its direct correlation to gold prices and low operational costs. The primary weakness, however, is its complete reliance on gold's price movements. For investors bullish on gold, this trust offers a direct avenue to participate in potential gains. Alright, that is our breakdown of GraniteShares Gold Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think gold is headed higher or lower? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching, see you next time.